Welcome everyone to Vested Interest. This is Shane back for another Stock Pick of the Day video. It is November 27th, end of another month, quickly approaching on into December. We go and into 2024 very quickly. We're going to close out another year. Hopefully it's been a great one for you, and happy holidays to you and your family out there. Hopefully you had a great Thanksgiving, getting ready for Hanukkah or Christmas or whatever holidays you celebrate coming up. Let's take a look at Best Buy today. This is one out of the consumer discretionary sector. Let's jump right in. If you want to know more about this company, check them out at www.bestbuy.com. That's www.bestbuy.com. That is where I pulled this information from. At Best Buy, our purpose is to enrich lives through technology. We do that by leveraging our unique combination of tech expertise and human touch to meet our customers' everyday needs. Whether they come to us online, visit our stores, or invite us into their homes, we have more than 1,000 stores and more than 90,000 employees in the United States and Canada. So they're brick and mortar stores. You may be aware of them. They hold a lot of, appliances, major appliances, video games, Apple products, laptops and computers, TVs and projectors, cell phones, headphones, radios, sound bars, Bluetooth speakers, home audio systems, small kitchen appliances, large appliances, major appliances, camcorders, cell phones, regular phones, a lot of the items that you may be buying, computers, you name it, not just electronics, but anything in that electronics space, as well as some toys and some other things as well in the store. That's in their brick and mortar. And they have really done a good job with their online presence as well. And I'm not sure, but I believe they still have their Geek Squad where you can go in and have someone take a look at your computer or build a custom laptop for you if you're interested in that sort of thing as well, or come to your house. I believe they had a service where they even come to your house and kind of look at what you've got going and try to help you out there. So they have done a good job. A lot of their brick and mortar stores are still open. So I know there was a brick and mortar apocalypse, so to speak, here a few years back. They survived that, kind of transitioned into a more of an online presence, as well as the service side of it as well. So they're still around. They've been around as long as I can remember, and I don't think electronics are going anywhere. If anything, they are becoming more and more part of our everyday lives. So www.bestbuy.com. Again, if you want to know more about them, check them out there. That is their homepage. Now, the reason we are taking a look at them, down 0.22% on the day. Not a huge drop, but a drop nonetheless. We are talking about Best Buy Company, Incorporated, ticker BBY, out of the consumer discretionary sector. Closed out the day at $69.36. 52-week range as low as $62.30, as high as $93.32. Definitely closer to their 52-week low, though not right up against it. Would like them to pull back a little closer to that, under 65. I think this is probably a good buy-in for this one here. Average volume 2.5 billion. Today was 2.9. Bit of a sell-off here. Again, not a huge sell-off, but a sell-off nonetheless. Market cap of 15.095 billion. A beta of 1.55. So they are more volatile than the overall market. You can see that volatility throughout the day here. Price to earnings ratio is low at $11.98 per share. Earnings per share, EPS, is nice at $5.79 per share. Earnings date was November 21st. We just passed that last week. And forward dividend, $3.68, paid out on the year. They are quarterly payer, divide by 4, or we'll see that here in a minute. Just wait a couple slides and you'll see what they're paid out on a quarterly basis. Very, very nice dividend yield with the pullback here closer to their 52-week low, 5.29% dividend yield. Very, very high dividend yield on this one. Ex-dividend date is coming up December 11th, so if you were to buy them December 10th or before, you would be in line for the next dividend payout. And their one-year target estimate, $73.52, at least according to Yahoo Finance. I am not affiliated with Yahoo Finance, just one of the sources that I like to go to. And they do have a 62.87% payout ratio. That's under the 75% that I look for. Now, I like to get into statistics, go down to dividends and splits. We're going to take a look at dividend yield theory to see if this one is presenting some value here. To do that, we look at the 5-year dividend yield average, 3.13%. We compare it to its current, 5.29, same number, 5.29, right? I know it says forward annual dividend. That's projecting forward compared to what it is today, same number. And since it is higher, and it is significantly higher, that speaks to some potential undervaluation on this one, at least according to dividend yield theory. Now, they do pay out January timeframe. We saw the ex-dividend date, December 11th. They will pay out on January 2nd. So I do like that they pay out in that range. Not a lot of companies do. Now, I also like to look into financials. You're going to find a lot of good information here. Balance sheet, income statements, debt to equity ratios, their revenue. Is it growing over time? What do their margins look like? Are they growing? Are they increasing their margins? A lot of good information there. We're going to look at free cash flow. We want growing dividends, and to have growing dividends, we need growing free cash flow because that is what dividends are paid out of. And typically when a company has nice growing free cash flow, they tend to increase their dividends over time. 2020, we're looking at 1.8 billion. 2021, huge jump up in 2021 to 4.2 billion. 2022, bit of a drop down to 2.5 billion, and so far in 2023, at least through January 31st, 894 million here, and it looks like to date 1.376 billion. So in line, probably close to what they did last year. Though if you look up here, repurchase of capital stock, you'll see they were repurchasing some shares in 2020, about 1 million shares. Little drop off in 2021, but a big jump up in 2022. So that can account for this 3.5 million repurchase of shares. Definitely accounts for the difference between the free cash flow in 2021 to the free cash flow in 2022. And it looks like they are continuing that trend in 2023. So even though it looks like free cash flow is going down, they have definitely increased their share buybacks. So I would say overall, they are seeing growing free cash flow as well as repurchasing their shares. So very nice to see here, reallocating capital very well. I love the repurchase of shares. That way, if you are a shareholder of a company, even if you don't buy any more, you are more of an owner as they repurchase those shares. Now, I always recommend more than one source, so stockanalysis.com is another one that I like. You pick any sources that you like. Just make sure you are picking more than one, at least two, if not three, so you can make sure the information you are getting is accurate and up to date. Now, according to the 13 stock analysts that have taken a look at this, they call it a hold. Now, again, 69.36, it's right on the edge of where I'd like it. I'd love it to pull back to their low estimate of $65, which would be a 6.29% decrease from where it currently sits. If it happened to hit their average, $76.77, that would be a 10.68% increase. That's pretty much in line with what we saw with Yahoo Finance's estimate as well. And they have a high estimate of $90. That would be a 29.76% increase. And if you were to buy them now, you would collect that 5+% dividend yield. Very, very nice starting dividend yield on this one. And under, like I said, the 75% payout ratio I'm looking for. So they still have some runway to expand that dividend yield. We'll see that dividend growth here in a minute, so I don't want to get too far ahead of myself. I like to get into statistics here. You're going to find the same information, just shown in a different manner. They do go back a little bit further on stockanalysis.com than Yahoo Finance does. That's part of the reason that I like them. I can go back further in time. They show the information in a very nice, usable format like this forecast here, very easily to understand. And if you were to go on their website, you'd be able to see how many of these 13 stock analysts call it a hold, how many call it a sell, how many call it a buy, how many might call it a strong buy or a strong sell. You'd be able to click on each one of these and see the readout as well. It just doesn't show up here on the slide whenever I freeze it in time. But anyways, I like to get in and look at return on invested capital and return on equity to see how well a company is reinvesting back into themselves and using their capital. Return on equity, I like 10% or better. They're at 36.75%. Smokes the 10% I'm looking for. And return on invested capital, same thing. I like 10% or better. 16.58%, almost twice what I'm looking for here. Very good numbers overall. I also like to look at earnings per share forecasted growth over the next 5 years. I like 5% or better. They're at 11.97%. Very, very nice here. I throw in revenue growth. It's not one I focused on, but you do want growing revenue growth over time. I just don't really have a number that I'm looking for. So long as it's growing, really depends on the company, how big they are. You can set up your own criteria here, but they are expecting growth, just not very fast revenue growth, 0.75%. Now let's look at the dividend. Again, 63.56. I think it said 61 on Yahoo Finance, under 75%. Either way, we'll call it 62%, average out the two there. Dividend growth of 4.55%. So not only do they have a 5+% starting dividend yield, they are still growing it at about 4.55% a year. So very nice dividend growth, very nice starting dividend yield. Went back to 2020, they were paying 55 cents. March 2021, they jumped it up to 70 cents. March 2022 up to 88 cents. March 2023 here recently up to 92 cents. I would expect another jump up in March of 2024. And again, they do pay out in that January, April, July, October timeframe. Not a lot of companies do. So if you're looking for one in that payout, on those payout months, to kind of round out your portfolio, a lot of companies pay out in the March timeframe. This one might be a good one to look at with a very nice dividend yield, starting dividend yield, some dividend growth, as well as a low, I wouldn't call it a low, but a moderate payout ratio here. I like 75% or less, and this is at 63.56. Very, very nice numbers overall. Let me know what you think of Best Buy down in the comment section below. Hit the like button, share with anyone you think that might find value. Drop a comment. Again, let me know what you think. Do you own it? Do you shop there? Is it one you're familiar with, or is it one you're avoiding altogether? A lot of people avoiding brick and mortar stores like this because they're worried about what might happen in the future, as well as these companies typically get impacted if we hit a recession. People aren't going to be going to buy, discretionary goods if we do hit a recession. This is the vested interest stock screener. This is how I set up the videos. It's also how I look at companies on a high level to see if I'm interested. If they meet 5 of 8 or 6 of 9 if they're a financial company like a bank, then I throw them on my watch list and do more of a deep dive to see what price I'm willing to pay for them and more into their financials. Well, that is it for this one. Let me know what you think about Best Buy. Always appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Help me grow this channel. The channel continues to grow because of people like you. Join us on our journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, stocks like this that we may be watching, we may be buying, or stocks we may be avoiding altogether. All here out in the open. I do portfolio updates every Sunday morning so you can see what I'm buying and what I'm selling, any options that I'm in, any dividends that have paid out. So if you are interested in that kind of content, again, hit that subscribe button down below and hit that notification bell so you are notified anytime that we put out any new content. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Best Buy you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below. I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money and should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.